Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Wednesday 5th of March. I'm recording the video now, 10 minutes to 6 p.m. Eastern Standard Time on the 5th of March. The situation is still unclear, but in the bigger picture I still expect that we're going to see overall about 3 weeks of downwards movement in a 5-wave structure for a C wave to find support at the lower of the two aqua blue trend lines I'm copying over from the weekly chart. In the very short term tomorrow, I expect one final upwards thrust to a short-term target at 1880, and that may be over during or early in tomorrow's session. It's likely to be over at some stage during tomorrow. Let's have a look at the charts. The main wave count remains the same. It's very bullish. It sees a new bull market having begun at 666.79 for a cycle degree fifth wave. Within cycle wave 5, we have primary waves 1 and 2 complete, and primary wave 3 is incomplete. We have intermediate wave 1 over here, and intermediate wave 2 is most likely incomplete. This dark blue channel is drawn on the weekly chart using Elliott's technique for an impulse around intermediate wave 1. We don't have a clear breach of it yet, which is an indication that intermediate wave 2 is not over. Second waves should usually clearly and strongly breach the channel containing their first waves. So, intermediate wave 2 is most likely an incomplete expanded flat, subdividing 3, 3, and then we need a 5 down. These aqua blue trend lines are drawn on the weekly chart. They're showing where long-term movement is finding support. There are clear instructions every day in the text article on exactly how to draw them. They are really important. Minor wave A within intermediate 2 found support at the upper of the two aqua trend lines. I'd expect the C wave to find support at the lower of those two trend lines. When minor B is complete, I'll look to see if there could be a target, calculated using a Fibonacci ratio between minor wave A and minor wave C. And if that target would bring price around the lower of the two aqua trend lines, I'll publish it. Otherwise, we'll just use this trend line as an indication of where downwards movement should end. Within minor wave B, the structure is very close to completion. We have a 5-3 and a really close to complete 5. The sideways movement that we saw for Wednesday's session was a 4th wave correction, which is close to completion. When it's done, I'd expect a final little 5th wave up. At 1880, minute wave C would reach 0.382 the length of minute wave A. Let's have a look at this on the hourly chart, where minor B begins here, this point here. We have a 5, expanded flat for a 3, and a close to complete 5. 1, 2, 3, 4 is an incomplete sideways moving double combination, I expect. I've looked to see if it could be a triangle. At first glance it looks like it, but it doesn't actually fit the rules for a contracting triangle very well. I expect it's a more common double combination, which is really close to completion, should move very slightly lower to start tomorrow's session, and then tomorrow I'm expecting a small piece of upwards movement to the short-term target at 1880. When that's done, minor wave B could again be complete, and I'll be expecting overall 3 weeks of downwards movement for a C wave. I want to see this pink channel very clearly breached on the hourly chart before I have any confidence at all that minor B is over and minor C downward should then be underway. This channel is drawn around this zigzag correction using Elliott's technique from the start of A to the end of B with a parallel copy on the end of A. At the daily chart level, if we simply move the degree of labelling within this downward zigzag or up 1 degree, it's possible to see that intermediate wave 2 could be over there. But it hasn't breached the channel containing intermediate wave 1, and it's a remarkably brief correction for intermediate degree, which reduces the probability of this wave count. Let's have a look at it on the hourly chart, with the possible end of intermediate 2 down here is this point here. Within intermediate wave 3, within the first wave of it, minor wave 1, we have 1, 2, a remarkably brief shallow zigzag, and if this is the start of a third wave, this wave count has a pretty huge problem. We have an enormous breach to the downside of this base channel which I've drawn around this first and second wave. If we're starting to see a third wave unfold to the upside, it should breach the upper edge of this base channel. Now I can handle some small overshoots of the lower edge, but an enormous continuing breach like this really makes the wave count look rather strange. I don't think this is an unfolding impulse to the upside unless I've labelled it absolutely completely wrong. If we have the start of a third wave here, then we may have a leading expanding diagonal almost complete. With the sideways movement for Wednesday's session is probably a B wave for this structure, and now the diagonal doesn't have to be leading, it could also be ending. So this wave count could be, instead of 1, 2, 1, it could be A, B, C, and fit with the main wave count better. However, we'll play devil's advocate and we'll consider the very unlikely possibility that price is about to shoot up strongly. If that's the case, then we need to see the diagonal complete and we need to see a probably deep second wave correction to follow it. The second wave can't move beyond the start of the first below 1809.22. Second waves following leading diagonals and first wave positions are usually really deep. This is a very bearish wave count, and it differs from the bullish wave count from the low at 666.79. The bullish wave count sees that point as the beginning of a new bull market. The bearish wave count sees that as just wave A, within a huge expanded flat correction. Within the expanded flat, wave B at cycle degree is a zigzag, and it's close to completion. Within primary wave C, which is unfolding as an impulse, we have the end of 3, we still need 4 to complete, and it's probably continuing as an expanded flat, unfolding 3, 3, 5. The short to medium term outlook, in fact possibly even for up to a year, for the bearish wave count does not diverge at all from the bullish wave count. The final target for primary wave C to end is 2190, where it would reach 1.618, the length of primary wave A. However, for this bearish wave count, when I know where intermediate wave 4 has ended, I would recalculate the target using the wavelengths to intermediate degree and look for ratios between intermediate waves 1, 3 and the upcoming fifth wave, because they are more reliable for the S&P than its ratios between A and C waves within zigzags. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.